Hello and welcome to the program. My name is Jeff Schmays. I'm a realtor with RE/MAX Advantage. Today I have a couple guests with me. I have David Snover, who's a loan officer with Prospect Mortgage, and I have Anita Horowitz, who is a broker who works with me, or I work for her, at RE/MAX Advantage in Peabody. If you guys have been paying attention in the news lately, just talk to your neighbors. Home prices are just really going through the roof right now. You talk to your neighbors, they can't believe that this house sold for this price and how quickly it took, and it's really quite a buzz, and we're definitely in that market phase right now. We're going to talk a little bit about that today with our guests. First of all, David, welcome. Thank you for joining us.
Thank you, Jeff.
And Anita, thank you as well.
Yes.
We're going to really focus today on first-time home buyers. What I've seen during my time as a realtor is a lot of couples coming through the door and trying to make offers on homes, and it's quite a challenge for them. And we're going to talk a little bit about how we can make that a little bit easier to realize the American dream. And first of all, we're going to start off with you, David.
Sure.
I think a lot of mistakes couples make is they come in to and look at a house and really want it, and they aren't pre-approved. So can you talk a little bit about what is required, why pre-approval is necessary?
Absolutely. Pre-approvals in this market particularly are very important, largely because most listing agents really wouldn't be interested in submitting an offer on any property they may be interested in without one. So it's lends credibility to them as a buyer, because a pre-approval is fundamentally a preliminary assessment of their financial profile. So what one does when they complete a mortgage, when they're attempting to complete a pre-approval process, is they have to do a few steps. One of which is, the first thing and most important, is they have to complete a mortgage application. And that can be done one of three ways with most lenders. It can be done in person, which I personally prefer, and probably many other mortgage providers. It can be done online through the internet. Most mortgage providers have that technology. Or it can be done over the phone. So a completed application, and then that's accompanied with income and asset documentation, and things like pay stubs, recent 30-day pay stubs, recent 2-year W-2s, most recent couple-month bank statements. When you couple the application with those supporting documents, the lender then runs that information through an automated underwriting engine, which comes back either approved or not approved. And if approved, a piece of paper is generated called a pre-approval letter, given to the buyers, ultimately to an agent, and
which we love
they feel
to see.
good about, which they love to see.
We love to see.
Exactly.
Yes.
And that's really kind of the pre-approval process. I will sit with people probably more than half the time, particularly first-time buyers, and I bring that up only to say, you know, a mortgage isn't something that, or buying a home isn't something one's going to do that many times in their life, 1, 2, 3, 4 times. So when they go about doing it, they oftentimes want to be very secure in the person that they're choosing, the company they're choosing. So meeting them in person tends to be a lot of folks' preference relative to pre-approvals, but it is not required.
Mm-hmm. About how long does it take when somebody sees you, spends, let's say, an hour and a half with you in the office to get that letter?
I can provide, and many mortgage providers will provide them same day or within 24 hours. It's really predicated on a complete, you're confident you have a complete application with permission to pull their credit, which is really important today. That's not always provided, and that's key. And the supporting documentation. So if you have all that supporting documentation, I would say 24 hours is probably the rule of thumb.
And tell me some of the things that are on the letter. Once it's approved, here you go, congratulations. What does it say? How much you can qualify for? The types of loans programs that are out there? Just tell our audience what's on that.
The pre-approval letter would be specific to a sale price, a down payment amount, then a loan amount. It would all appear: sale price, down payment 5%, loan amount of X. It would identify the loan program: FHA, VA, conventional, and unless there were any contingencies or anything that had to be included, that's pretty much it. It's fairly straightforward. Identifies how much money one qualifies for based on a certain amount of down payment in a certain type of program.
Quick question for you, Anita.
I was going to say that to me on my end is most important, because that pre-approval lets me know where the buyers can go, how much can they afford, and perhaps they can afford X amount. It doesn't mean they have to spend X amount. And the other thing is, when we do get a pre-approval, we as realtors, have they ran a credit check? Have they done employment verification? So is it pre-qual? Is it pre-approved? So it's most important to deal with someone like David who can say they're good to go, because we want the buyer to be secure with that.
You mentioned pre-qual.
Yes.
Can you define the difference between the pre-qual and pre-approved?
I might have to lend that to David,
okay.
because
Or
to
David,
me,
will you want to address
I
that?
would, sure, yeah, no, that's many years ago, pre-qualification was probably more common. Pre-qualification, if I can use the maybe slang term, it's like an estimate of how much you qualify for, Mr. and Mrs. First-Time Buyer, on the back of a cocktail napkin. Hey, how good's your credit? Oh, it's great. I'm 800. And roughly how much money do you make? X. How much do you carry in debt every month? Short-term, long-term? X. Okay, give me a second. Calculate. Boom, boom,
Exactly.
boom. Here you go. Not that doesn't have some merit, but you, in this market and in the last number of years, folks, any good agent, you can't rely on that. Let's just put it that way. So you
Right.
don't really want to explain it.
because in this market, we need to bring our buyers to the table from a position of strength,
Absolutely.
because of the competition that's out there. So that's the first thing for when a buyer comes to me. I say, we need to get you a pre-approval, because that is what's going to give them strength if they are up against competing buyers.
Okay, thank you. You've talked a little bit about credit. How has obtaining a pre-approval changed in terms of the credit crunch that we had, which was a contributing cause to the recession of 08-09?
Very good question, and I have talked exhaustively about it over the last 8 or 9 years. And the good news is it has trended, for all intent and purpose, trended upwards since 08-09. I mean, very difficult to get a mortgage the following few years, but I would say with confidence in the last 2, 3, 4 years, as the economy has gotten better, job growth has continued to improve, inflation has remained low, and thankfully interest rates have remained low. The lending environment has definitely improved. So it is, I don't know if say easier, because it still requires what it requires. Guidelines are guidelines.
Right.
However, lenders, mortgage providers of all types will take, and I don't want to go too deep with this, but real quick, they will take FHA guidelines or VA guidelines or Fannie Mae guidelines, and they may then choose to provide or require what are called overlays, which are additional guidelines on top of the guidelines, and those are mortgage provider specific. So you can go to 3 different lenders and get 3 different decisions potentially. But in general, the lending environment's gotten much better.
Okay, let's talk a little bit about the financing programs. You addressed briefly FHA,
Yep.
Conventional,
Yep.
VA.
Yep.
Can we start with the most common,
Sure.
and then let's work on the other ones after that?
Yeah, and the two most common are FHA and conventional. I'll refer to them as government insured and non-government insured. So your government insured programs are FHA, Federal Housing Administration, or VA, Veterans Administration. They are government insured loan programs, which means quickly that in the event of a default, there are funds that come from the government to help offset that loss.
Okay.
On a conventional mortgage, Fannie Mae is the acronym most people use. So a conventional mortgage means a Fannie Mae or Freddie Mac type mortgage. That tends to be the mortgage program that most applicants aspire to initially. It has a tighter box, a little harder to qualify for, but the lending terms are the most attractive compared to FHA. So Fannie Mae conventional loans are not government insured loan program. So there's an added risk. So the box is a little smaller to qualify for. But within those programs, you have all of your fixed rate, adjustable rate options. If I can take them one at a time, the Fannie Mae conventional loan, the credit score requirements, the debt to income ratio requirements, and the down payment requirements are a little bit smaller, a little tighter to qualify for than an FHA loan. Thus, the more attractive terms.
Okay.
Alternatively, FHA, which has been around since the 30s, I think, almost 100 years, it's largely to provide for home ownership, promote home ownership. It has the most flexible lending program, so you can borrow as little, it requires as little as 3.5% down on an FHA loan, whereas with a Fannie Mae loan, it's 3% down. So they both have low down payment program options, and FHA is just a more flexible program, yes.
Right, and of course, if they're doing FHA, there's certain properties that they have to think about whether they could get into that property or they couldn't because of the guidelines of the FHA,
Yes.
right?
Very
Yes.
important, yes. Condominiums, Anita's speaking largely to FHA loans. The property condition requirements is a little tighter than a Fannie Mae loan. And specifically with condominiums, the complex itself has to be FHA approved, or you cannot use an FHA loan in that scenario. And many of them are not FHA approved. So if one doesn't qualify for a Fannie Mae loan, they look to FHA, but they want to buy a condo, their pool of properties could be smaller.
When somebody meets you in person, do they come in saying, "Hey, Dave, I want an FHA loan," or "I want a conventional loan," or
That's
"Do I
the
qualify
question.
for a VA loan?"
Yeah.
Or how do you advise them on that?
Yes, I have people come in and say, I want an FHA loan or Fannie Mae loan, and my first question is, sure, we can take a look at that. Tell me why you're interested in that. So I want to understand where they're coming from, what they've learned, what they've known, because in many cases it's not always fact-based. They're making that decision on bad information. So I say, how about we take a step back and just gather all the necessary information for myself to evaluate, to give you all of your options, because I view my role, and I think all mortgage providers largely view their role as helping buyers understand what their options are. What's out there as far as financing options, and do I qualify for A, B, C, and D? And if not, please explain to me why. So yeah, a lot of folks will come in preconceived. I just try to break that down a little and open it up and just say, there might be a better program for you. Mass Housing would be a good example. Massachusetts has a state bond program. Lots of people are not aware of that. There's lots of wonderful advantages to it. And they came in wanting this program, and they walked out with a much better one for their situation.
Anita, a quick question for you. As a buyer's agent, in this case you're representing the buyer in a transaction, is there do you advise them saying, I think with this pre-approval letter you're well suited to making a successful offer, or do you have any guidance or advice when they come in with that pre-approval letter and says conventional loan of X, Y, and Z?
Right. So the first thing I ask a buyer is, I see you're pre-approved for X, Y, and Z. Is that what you want to spend? Is that your comfort level? What's your monthly comfort level of expenditures? And sometimes I tell the buyer to go back to the mortgage rep and say, I know I can afford X, but my comfort level monthly is this. And that zeroes in a little bit more to the price.
Okay, thank
Yeah.
you. Let's talk a little bit about down payment, and
Sure.
I think Anita might be able to address this as well.
Yep.
I think we're not only talking about down payment, we're also talking about closing costs.
Yes, we are.
So, I don't know if people think about that when they go see you or someone else. So, pretend I'm coming in as a buyer.
Sure.
And have given you all the documentation that you need.
Yep.
You've come back with, you can qualify, or you're pre-approved is probably a better word for X. Also, but you also need to factor in, closing costs plus, any potential expenses that you're going to need to put into the house once you buy it.
Sure.
How would that conversation go?
Sure. So again, the critical beginning is the completed application with the supporting documentation. With that, I wouldn't generate a pre-approval letter until I was very clear, they were very clear as to how much of what I see on paper. I have $50,000. in this account and that account. And how much are they willing to use for a down payment and closing costs? Because just because their asset statements show they have this much money doesn't necessarily mean they want to use it all. With a lot of first-time buyers in this market, a higher-priced market, the 3.5% to 5% down programs tend to be very attractive because 3% of a bigger number is a bigger number. So they need that bigger. So it's doing the math with them initially as far as just the down payment. We're looking at a $300,000 house, range. Okay, let's look at conventional home ready, 3% down for now, which would be maybe start one, conventional versus FHA. So that's $9,000. And oh, by the way, we have closing costs and prepaid expenses. Now they will vary on a per mortgage provider basis. Shouldn't vary substantially if everyone's doing it accurately. You could see closing costs 1% to 2% of the sale price might be a rule of thumb. If it's a $300,000 sale, you might see closing costs $3,000 to $4,000 kind of range, not including prepaid expenses. Prepaids are not closing costs, but they are required funds at closing for things like escrow taxes and insurance. So the two closing cost and prepaids, in addition to the down payment, isn't always something, to your question, that a buyer walks in the door thinking about. If they're not a veteran, they have to have a down payment. So they're focused on the down payment, and then, oh, by the way, I have to have closing costs too. How much are those? So they usually don't have any real good feel for that, or some don't. So it's making sure that a first-time buyer has the ability to prove they have the money to cover down payment, closing costs, and prepaids, absent any gift money they could get to help them achieve that.
And Anita, if you just add on to that, I know I think there's a term now or a document called the TRID disclosure, where the buyer has 3 days before closing, they know what that number is. Is that accurate?
It's a consumer protection program put in to help the consumer make sure that what they're purchasing, what they see on paper, is what they're going to see at the closing table. So it protects the bank as well, the lender, to say, I didn't get all the documents in time, we may need to extend, and that's extend the closing date, correct? So that's what the TRID is, just a protection for the lender to extend a close date if they need to.
Great.
Right.
All right, good. David, thank you very much. I appreciate all that information. We're going to be back in a minute. We're going to talk to Anita about this hot market we're in. Thank you.
If I were my community, I would lower the gas and tax prices.
I would make a zombie apocalypse.
I would have everyone have jetpacks.
Give everyone cupcakes right before they go to school.
I would make everyone shake hands and introduce themselves.
If I ruled my community, we would steal so much money we'd be rich.
We would become a country and we would have paintball fights every Tuesday.
I would make everyone wear heelys to get to school faster, work faster.
So if I could rule my community, I would make the school lunches way better, like spaghetti and meatballs, way better meatballs, and maybe better sandwiches, more subs, salads, more healthy meals, and have ice cream on the side.
It would make Peabody better by saving people money so they can live happier lives.
Because we'd be so rich off of all the money we took.
Peabody needs to be more fun, and then we need our own freedom and more rights.
No one would ever have to walk.
It would teach children how to survive.
It would make Peabody better because a lot of kids now don't like their school lunches.
Because cupcakes are awesome and cool and they taste delicious. Because they're just fun, and because it would save gas and not pollute the air with the smoke.
To make it a more loving, welcome place and bond everyone.
Welcome back. Just a reminder, I'm Jeff Schmays. I'm here with Anita Horowitz from RE/MAX Advantage and David Snover, and we're talking about the housing market, which a lot of people seem to be talking about these days, Anita. I mean, we're in the trenches every day, so we know what's
Absolutely.
going on out there. Can you tell us exactly what's going on in Peabody, what the market's been like this past year?
Sure. So Peabody is still a very, very sought-after community. We've got a good tax rate, we've got a good electric rate, we've got a good water rate. We have close proximity to the major routes, so we can get in, we can get out quickly. And I think we have a good base of property pricing, so it gives a variety of buyers an opportunity to buy into the community. So I did a little statistical research, because we have to know the pulse, we have to feel the pulse, because we're right in the trenches every day. So Peabody's median sale price right now is $382,500. And that's almost a 5% increase from the prior year. That's single family. Condominium, $253,600. Smaller increase, but nonetheless an increase. And typically, our first-time buyers are buying into single family or condominium.
Okay.
Yeah.
Do you have your crystal ball in front of you? Do you have any idea what 2017 might be bringing?
It's an election year. And I'm doing this 30 years now, so I've been in the peaks and the valleys for different markets. And whenever there's an election year, we don't know.
Okay.
I find the gurus kind of take a step back, kind of see what the new guy's going to do. So I think this year is a good opportunity for real estate. I don't know what next year's going to be.
Great. Obviously, interest rates are fantastic. I mean, they're at an all-time low. I mean, David, you can attest to that. I mean, you're living it.
Yep.
We all are. So that's great.
exciting.
Great for first-time home buyers. That may help offset some of the price
higher
increases
pricing.
that we've been
question.
seeing.
Exactly.
However, that being the case, we also hear that there's not a lot of property out there. The inventory numbers are down, making it the demand extremely high. People are often coming in over asking price. How can you guide, advise first-time home buyers who don't have that house to sell, so that they have that, make a down payment or whatever or attractive to a seller?
We can only go with our times, and the times are very competitive today. True, the lower rate does allow a buyer to get into the marketplace, but there's always a yin and a yang. So they're up against other buyers. They have to have a strategy, and then they have to understand they may not get that property. Perhaps that's out of their price range. So we want to guide the buyer to say what's happening in the marketplace, but we don't want to put them in an over financial position where they would not be able to afford their monthly payments or buy sneakers for the kids. You have to really guide them in that.
Have you ever seen maybe some first-time home buyers that have been from property to property who may be a little frustrated because their offers they're making aren't enough and are not being accepted? How would you advise them or guide them?
It's just a dose of reality.
Yeah.
And you're going to win or you're going to lose, and we move on. We find another property. I think there's always properties coming on the market, and there's always new buyers coming into the market.
Okay. We live in an age, and I don't know if it's because of the computer, but do it yourself, DIY. People think that I can do it myself as a lawyer. I can fix my own car. I can make a jet engine, whatever it is. We have Zillow. We have these competing real estate valuation firms and whatever all over the place. Why should a buyer hire an agent as opposed to doing it themselves?
Right. I don't think I could say it better than what's written on the mandatory consumer relationship form, and that's a mouthful. But the agent that a buyer hires to be a buyer's agent gives the buyer undivided loyalty, reasonable care, disclosure, obedience, confidentiality, and accountability. That's a lot of words there.
A lot of value.
It's a lot of value. And so if a buyer tends to hire a buyer's agent, that agent is going to work for that buyer. The internet definitely has brought consumer education, and there's nothing better than working with an educated consumer. But when it comes down to the negotiation and the process, because buying a house is not an event, it's a process. You need that guidance, and so that's where the buyer's agent is prime for the buyer.
Let's talk about the process. That's a great segue,
Yeah.
Anita. If I didn't know any better, I would have helped you guide into that process. But there's a 5 or 6 step process. Can we do step 1, 2, 3, 4, 5, starting with making an offer?
Yeah. Well, to me, the first step is to have the buyer be pre-approved, as David said. So
Right.
I would never want to bring anybody to the table, and to the table means writing an offer and presenting to a seller without a pre-approval. So that's the first step.
Okay.
And then, of course, discussing with them really their comfort level of monthly payment.
Okay.
Then the next step is to talk to a buyer, ask them what they want out of a community. Do you want schools? Do you want sports? Do you want spirituality? Do you want capes? Do you want ranches? Do you want splits? So different cities offer different offerings of properties, and so I think that would be in the pre-discussion. And then comes what I call the L&L, which is the looking and learning. Let's see what's out there. Let's see what your money can buy. Let's get educated a little bit. Let's go out shop. Let's come back to the computer. And so we're able to zero in a little bit on style and pricing.
Okay. Okay. So an offer has been made and accepted.
We're very excited.
We're really excited.
Very excited.
What happens next?
So next is home inspection.
Okay.
The buyer can hire a certified licensed home inspector to come into the property and do a structural inspection, radon inspection, pest infestation inspection. There's a lot of options. They can also bring in Uncle Harry if they choose. He can also do the inspection. So it's up to the buyer. And once we get through that inspection period and everybody is still happy, then we go into what we call a purchase and sale agreement, because Massachusetts is a 2-step state.
Okay.
We do a contract to purchase, and then we do a purchase and sale.
Okay.
So that would be the next step after that.
Okay. And then once the purchase and sale is signed off by parties, and presumably there's some lawyers involved in this,
Usually,
some legal
yes.
representation.
We are not lawyers, we are realtors.
Right.
Yes.
Right. So we're typically not writing up this agreement. This is something that is
A legal binding contract.
contract.
And if they don't understand it, they are advised by their realtors to seek legal advice, which
Okay.
they should.
And is there an appraisal process that follows after the purchase and sale?
Right, so after the purchase and sale is signed, we kind of sit a little bit with a little nervousness because we're waiting for our financial
For us.
commitment. The lender now steps in. We have the appraisal process, of which the lender decides if the house's value measures up to the buyer's mortgage.
Okay.
And we wait for that day, and we have a date in our contracts that say, congratulations, Mr. and Mrs. Buyer, or whomever, you have the loan.
Okay.
That's an important day, a very important day.
Okay. And finally, we have the closing, correct?
We have the closing.
So from start to finish, is there a normal time lapse from getting the pre-approval letter? We've got the house that we like, we've made an offer, it's been accepted, and we go to closing, and then we get the key to the house.
Right, very exciting. So yes, I would say during the lending process, we are probably looking at a 45 to 60 day turnout to home ownership.
Okay.
If somebody's not mortgaging and they are paying cash for a property, which is rare, but it happens, that can be done right after title search, and that, of course, speeds up the process.
Okay.
Yeah.
I want to go back to one thing we were talking about, in terms of the looking and learning segment.
Yes.
So we're back to the first-time home buyers. I mean, that's who we're focusing on. And, let's say we have, Emily's been living with her parents. She's in her 20s, but now she's married. Well, she's about to get married, but she's been living in a really nice house. So now she's going to look for a house that maybe isn't really as nice as the house she's living in. She doesn't like the wallpaper. The paint color is
Right.
whatever. The refrigerator is from like 1978. There's like linoleum
It's very
floor.
common.
It's not tile. It's not hardwood. It's like a linoleum floor. How do you sort of talk Emily into or out of, this is just cosmetic. This can be fixed. How does that conversation go?
I think that's part of the looking and learning. So it's educating. So we may go look at properties in the lower of their qualification range so that they can see what that value is going to bring them. And if they're not satisfied, we go to the next middle range, and then maybe we stretch a little bit and go to the high range to view. And the reason why I say to view is because I will not guide them to buy when I know that's over their price range. But what it does is it says, this is what this house has at this price range. I realize that's over my price range. And it gets them into an acceptability of where they really can, where they can afford. You want to be able to afford.
Right.
Yeah.
But do you ever chime in and say, hey, Emily, we can change the paint color, or is that really not your?
No, I think that's what comes with this experience of hiring an agent, is for them to come in and say, look up. You didn't see the crack in the ceiling. Right. Look down. You didn't see the sump pump in the basement. It doesn't mean it's a bad house. It just does the education process so that we can point things out to them that a novice may not have seen.
Okay.
Yeah.
We're almost ready to wrap up. I have one final question for each one of you. Mm-hmm. For first-time home buyers, is there any additional information or resources that they can tap into to try to get some more information? There's
mass.gov, which has, you can search and put in any question. Okay. There's individual websites. I hesitate. I say go out to the other the real estate websites. There's many of them out there, but you have to read the fine print and the small print and the bottom disclosures. So I think you just have to make sure that when you go out to the internet, although it holds a lot of information, you want to make sure you're getting the right information.
Okay, David, anything to add to that?
I think most first-time buyers today are very internet savvy. Mm-hmm. Most all of them have done months and months of work on the internet, researching everything. And in the mortgage side, I would say something as simple as Googling Fannie Mae or FHA or VA will give you many options if you want to learn the technical components of those programs. Mass housing, mm-hmm. And then of course individual company, Dave Snover, and individual agent websites.
Great. Well, thank you. David, thank you very much for appearing on the program. I appreciate all your insight. Anita, thank you. We'll see you a little bit later on today.
Absolutely.
Thank you very much.
Absolutely.
We're going to sign out here. Thank you very much for watching.